romantic rappers.
Oh, David, you must do it for us.
Well, if they can make this music more funky. Let me see if I can do my voice like those rappers. Here we Here we
Here we go.
Well, if you're blind as Helen Keller, you could see I'm David Rockefeller. So much cash up in my bathroom is already teller. I'm outrageous, I work in stages like syphilis, but no need for prophylactics. I'm up your own amino match. Shit ain't buff, but my green got some amino acid. Keep my hoes in check, no rebellions if your ass occur. Shit, it wouldn't be the first time I done made a massacre. Nigga, please, how you figure these motherfuckers like me got stocks, bonds, and securities, no impurities. Straight Anglo-Saxon when my family got their sex on. Don't let me get my flex on. Do some gangster shit, make the army go to war for Exxon. Long as the money flow, I'll be making dough. Welcome to my little pimp school. How you gon' beat me at this game? I make the rules. Flash a little cash, make you think you got class, but you really selling ass and ho, keep off my grass, less you cutting it. See, I'm running shit. Trick all your motherfuckers is simps. I'm just out here.
That was showtime. I'm up house. That was showtime. I'm up house. That was showtime. I'm up house. That was showtime.
So cute. John Paul, why don't you entertain us with something as well?
Well, what should I do?
Why don't you rap for us?
No,
Come
no,
on,
no,
old boy, I did mine.
It's so tribal.
Well, very well.
Oh, goody.
But hold my martini. I have to do those hand gestures. We will begin at the commencement of the next measure.
Now get ready, I'm JP Getty. I'm tearing shit up like confetti. My money lasts longer than ever ready. Ain't nothing petty about cash, I never lose. This is just like the stroke, but the hoes don't choose, I choose you. No voodoo can hoodoo you from getting treated like.
Hey, it's shit. Hey, it's Soleil, and this is episode 376 of the Orange Pill Investor. That was the coup. They can rap, but be careful. They're a bunch of raging commies. And what are you gonna do? So I'm not going to talk about it for very long. We'll get into the trades or whatever. But I saw Sailor's 21 Truths for Bitcoin, and it was really good. You know, it's worth a listen. And I had to be like super picky and pick out the one thing that I could complain about. And you know, so I immediately paused it and like wrote it down. And he was trying to get into the 1984 spiel, you know, freedom is slavery, ignorance is strength, and all that stuff. And one of the things he said was Bitcoin is capitalism. And I was like, you know, it was like the record skipped. I was like, hold up. I think that is kind of an important distinction. For me, Bitcoin is the free market. And I know a lot of capitalists think that capitalism is the free market, but I'll try to make my case for why I think they're not the same. So you've got capitalism as an economic system, but then you've also got a political system. And they are definitely going to interact or even bleed into each other. And at some point, maybe they even become the same thing. So from a pure economic standpoint, you can just say that capitalism is the independent ownership and means of production, all of that good stuff. And that socialism is, you know, the centralized ownership of the means of production. But what happens when there's a political system in place and it is based on capitalism? At that point, whoever holds or controls the most capital wins the political game. And you could call that crony capitalism if you want. I guess if you're a pure capitalist, you'd probably say, was it the No True Scotsmans? You'll say, well, that's not real capitalism. But Bitcoin actually solves that problem. It basically solves capitalism's biggest problem of whoever can stack the most money gets to control and make the rules. And with Bitcoin, if you've doesn't matter how many sats you've stacked, you can still run your own node. And if the people with all the money, with all the capital, millions upon millions of Bitcoin, they can't force you to run their node. And so in that sense, in not necessarily from an economic standpoint, but from a political standpoint, Bitcoin is anti-capitalist, but it's also anti-communist and anti-socialist. So it's the free market, and it's going to be interesting to see that I think Bitcoin is going to kind of solve the capitalist versus socialist debate once and for all, because the free market's going to decide. And I definitely think that capitalism is a powerful tool to eradicate poverty, but I don't mind if I'm running my business in a capitalistic way and there's a commune down the road and they want to sit around and make their own soap, or God knows what kind of shenanigans go on down there. But if they want to compete in the free market against the capitalists, you know, game on. I have no problem with that. And this isn't my idea, but some people have said it, and it kind of makes sense to me. Like, I think even the most hardcore capitalist is still a socialist at home, right? The mother and the father decide how much sleep the children are going to get, how much food and what kind they're going to get, and the children are not expected to you know, pull themselves up by their bootstraps and grow and produce their own food and knit their own clothing and all of that good stuff. So um, it was literally the pickiest little thing that I could pick out of the entire speech to take issue with. So it made a nice intro for the show. All right, let's check the chats and then probably not even place any trades, because strategy is just kind of hanging around 300, but maybe we'll look at the charts a little bit. What's up, Bitcoin Breaker, Colin? Let's see. Do you recommend Robinhood or Tasty Trade for options margin trading for small accounts under 10K? I'd probably trade on Robinhood for the free trades and then just open a Tasty Trade account. You can still use the tools even if you don't trade there. And then you grow your account to 50 or 100 grand or something, then maybe you start moving some stuff over to Tasty Trade if you appreciate their tools. I listened to Tom Sosnoff in an interview, and he said that they operate under the goodwill model, which is they give away their research for free, and they try to engender goodwill, and if people feel like they're providing value, then you can deposit some money into their account and place trades. So for example, I believe every single one of these contracts cost me $1. If you do a lot of 20, then I think they cap it at $10. So if you want to buy 20 at a time, I think they give you a discount. So maybe dollar turns into 50 cents or something. But with an account around, what'd you say, 10 grand? Yeah. So, with 10 grand, if you're trading mining stocks, 100 shares on a $10 stock's $1,000. So you could get what, like 100 shares? Excuse me, 1,000 shares. And then how much profit are you going to be able to get squeezed in here? You know, you sell the 8 or the 850, you collect $13, but the bid ask spread, you know, is pretty tight here, but you're not going to get it for 14. You're going to lose a penny because you're really, if you want to fill, you're going to have to sell it for 13. And if you're going to lose $1 getting into the trade, you're going to lose another $1 getting out of the trade the next Friday, right? If you win that trade and you have to buy it back for a penny. So that's already $2 that you've wasted on the bid ask spread, which is you know, that's over 10% of your profits is just getting eaten up by the bid ask spread. So on a small account, I think it's unreasonable to say that you should be paying for trades. And now that's, you know, that's $3. Tasty Trade doesn't charge you to close the trade, I don't believe, just to open it. But now that would be $1 getting in the trade, $1 getting out of the trade, and paying $1 for the privilege of placing the frickin' trade. And now you're, you know, it's like 25, 30% of your profits is being sucked out through these fees. So I wouldn't feel guilty at all about opening up a Robinhood, trading for free, and opening up a Tasty Trade account, and you know, just to have access to the tools and the charting and the watch lists and all of that good stuff. Yeah, just take advantage of everything. Um, and the Goodwill model worked because I place the majority of my trades on Tasty Trade and pay those fees kind of like a tip, right? Some people will accept tips and what are they, super chats and all this other shit. And so, you know, I've gotten a lot out of Tasty Trade's research and their platform. And so I've moved the majority of my accounts over there. And I'm happy to pay those fees. But it's a lot. And so when you're dealing with larger stocks, it's much less of an imposition, because if I sell a covered call for whatever, $375, and one of those dollars gets leached out to pay Tasty Trade for them to keep the lights on. Now, instead of it being 20% of my profits, it's like a quarter of a percent. And I think that's perfectly reasonable. And it just gets even better and better. The more the option costs, it's still just $1. So if I'm going out here and I'm selling whatever, the 375 for $1,000, now that $1 that I'm paying Tasty Trade is like 0.025% or something. Gets kind of meaningless at that point. But yeah, if you got a 5K account, 10K account, just load up Robinhood, use Tasty Trade's features, and do all your trading on Robinhood until you can get to a place where the little fees are meaningless. So Paradise, see Andrew, thoughts on the increase in M2 global money supply suggests a big strategy run up in the summer. Yeah, I think that's kind of a no-brainer. The fact that the United States can barely pay the interest on the debt means the only way for them to not hard default is they have to soft default by printing. And it doesn't matter if the Fed lowers interest rates. I think they're basically saying they want to lower by what, 0.5% this year, maybe two reductions. Um, I think it's just pretty obvious that it can't go up. If it goes up, there's just no way they can pay the the interest on the debt. Um, and there's another aspect to that as well. Like they have to hide the natural state of the world being deflationary, which if you listen to Jeff Booth talk even just once, he'll probably say it 2 or 3 times every time he gets interviewed. But the only way that they can hide the deflationary nature of technology and the entrepreneurial spirit is by creating an inflationary environment so that they can steal the wealth and production of the world for their benefit. And that's been not that difficult to do over the last hundred or maybe thousands of years. But with the invention of artificial intelligence, deflation is going to increase exponentially, meaning the prices of everything is going to spiral downward exponentially because AI and humanoid robots and all of this stuff is just going to make everything dirt cheap. And the the mining companies, and I don't mean metal miners, I mean the Bitcoin miners, are constantly seeking as much energy as they can possibly get their hands on, and they're constantly seeking unexploited avenues. So some frickin' water turbine in the middle of Africa somewhere where normally that energy would just be completely wasted because you can't pump it hundreds of miles out of the middle of the nowhere. Um, you can suddenly connect it to miners and bring cheap electricity to places where it would never you would never be able to do that before. So it seems counterintuitive, but infinite demand for energy will not drive up the price. It will drive the price down because it has to the market will find cheaper and cheaper sources of energy to meet that demand. So while some people think that, the miners are bad for energy because they consume so much energy, it actually is going to end up having the reverse effect in that um, every single energy source will be found and exploited and made to run as cheaply as humanly possible. And between that and just AI in general, reducing the costs of everything, it's going to be infinitely more difficult for the fiat system overlords to create inflation that combats this exponentially increasing deflation rate. So you can expect the printing to explode like nobody's business. It's um I don't know how long they can keep it going, but the fiat system is going to be under some serious stress to to keep creating an inflationary environment when the deflationary forces are growing exponentially. So I could have just said yes, they're going to print and number go up, but no, I could have said all that with fewer words if I had only had more time. So great question. All right, let's minimize. Oh, actually, I already didn't. I didn't I didn't have it up anyway. Let's get my head out of the way. Yeah, I can't imagine I'm gonna do anything. I'm basically fasting in this account. I guess I'm on a covered call fast. Basically, I'm waiting for the Mandel candle and for the prophecy to to come true. And currently, the amount of theta that I have dragging this account down is basically about 1,300 a day. Now, I think my overall portfolio values over the last couple of weeks has basically been pretty neutral. We got the pump up to 275, but a lot of my covered calls were at 275 when I closed them last Friday. So I'm probably just breaking even this week. I don't know if it's made up for this. No. Was it 5 times? It'd be 6,500. Yeah. So by not selling any covered calls here and having a negative theta, absent any price appreciation, this account would go down in value about 6,500 bucks a week. So hope's not a strategy, but I guess I got my fingers crossed, hoping for some kind of rocket ship. And this is Tasty Trade's app, which I stopped trading for the videos because it's a little too small. But I still have my 50-day and 200-day moving averages built in here. So I'm just going to take a quick look. And so for Bitcoin, we're coming down to the 200. So it just seems like we've got to be priming for the rocket ship. Now, if the 50 stays at this angle and just crashes through the 200, then I guess the bull market is over. I don't know. You can see in August, because we'd had so much chop since March, the 50 did cross briefly under the 200. I don't know if this is the end all be all, but you can see that the angle of incidence is very, this is just coming across pretty horizontal. And then a couple of months later, it just crossed back. So if you could technically call this a death cross. And then we got the golden cross again in October, right before the rocket ship. So if you were following something like this, you would have gotten out here, gotten back in here, and basically broke even if you were out of the market between August and September. And then you'd have jumped back in right before the pump. I don't know that this would have done anybody any good because it's basically traded for around the same number. You would have missed the bottom, and then depending on, you wouldn't have been able to trade in and out of this price action. But if we go back to when the bull market was over last time, we were at whatever it was, 67. And you can see the 50-day moving average just, this is like at a 45-degree angle, just crashes below the 200 and it's basically stayed there. Not a technical analysis guy, but just kind of looking at this, zooming out, I think can be, I don't know if it's instructional, but maybe slightly informative, right? So we got the death cross and the 4-year cycle reared its ugly head, and we got a year and a half of bear market. And then we got the golden cross again, February of 2023. Again, we got this little brief, death cross, golden cross, but you can see again the 50 is just kind of like just barely kind of skimming it. The angle here is very shallow. It's not like it's just crashing down through the 200. So that's what this kind of looks like to me. We had the 6 months of chop. And so, you know, this is barely a death cross, right? Now this looks like this is coming down. And so if this doesn't, if this doesn't kind of even out a little bit, I don't know, does that mean that the bull market is over? I kind of doubt it. Um, with all of the catalysts that we have, I can't imagine the bull run is over yet. I am a little bit nervous about getting into the S&P 500 for strategy in Q1. We need some big shit to happen in the next 9 days, which Bitcoin can do whatever it wants in 9 days. It can go to 100 very quickly. And if it does, then I guess we're getting into the S&P 500 based on the Q1 results. If we don't, then I guess we got to wait for Q2. But if we get another 3 months of chop, then we got to wait for Q3 or Q4. It doesn't mean that it's the end of the world. It just means we got to wait. And I guess I got to say, not financial advice, but I'm still bullish for 2025, I guess is the point. Corporate adoption, nation state adoption, all the money printing that needs to take place to keep the United States from defaulting on their debts. The only thing that worries me short term is if Trump is not happy with a 50 basis points reduction for 2025. If they want more, they could get in a staring contest, play a little game of chicken with the Fed and just go balls out with the tariffs and spook the market. If they crash the S&P 500 20% in short order, then the Fed would kind of be kind of force their hand, right? And if the S&P 500 tanks, Bitcoin's going to tank, strategy's going to tank, everything's going to tank for, whatever, a couple of weeks to a month. Then they'll have an emergency frickin' meeting, lower the interest rates, and we'll be back off to the races again. So even if we do get a repricing event like that, I'm not worried for the rest of the year, really. But just keep in mind that those risks are always there. If you can look at strategy, this entire bull market, the worst strategy has done is gone down and kissed the 200, which is what we got here. So anybody that was panic selling here is probably going to regret that. We've only, we're back up 20% from here already. And if we can just eke our way above the 50, then, we'll see good things again. So yeah, what we really need, you can see that the 50-day moving average is at 315. So we need to make 315 the bottom, right? 315 needs to become support instead of resistance before we get the rocket ship. So I don't do price targets, I don't do predictions. I just, if we're going to get number go up, it's got to clear some of these levels. There's just kind of no way around that. So I don't even think that's really technical analysis. That's just common sense. So anyway, I'm going to hold my breath, and I've only been fasting from covered calls on this account for 7 days. So I'll give it another week, 3 weeks at the most, probably. If we don't get something by the end of April, then maybe I'll have to go back to my addiction. So MSTY is still beating me by about 22,000. So I started, I think MSTY, I started that account with 215,000, and I think it's worth 179. So even MSTY is down. What is that? 20%? Yeah, from 215 to 279 is about 35, 40 grand, something like that. Anyway, but I'm down double that. I'm down another 22 grand to about 157, I think. I need a pump to about 325, 350 to get even and pull ahead of MSTY at this point. So not really worried unless the shit hits the fan. So I'll worry later about that. This is the joint account. I've got the poor men's covered calls, which are net theta positive, right? So there's $87 a day draining into this account more than is draining out. So these poor men's covered calls are structured correctly. However, because I've taken all of the premiums that I've collected from these covered calls and I've just been plowing them into more long calls, all of these long calls are decaying like crazy. And so this overall account is not structured properly as an option seller's account. And I intend to remedy that upon the next pump, right? Even if it's only like 350, 375, even if we don't get back to the $500 level, which again, if 500 was resistance, then we need to make 500 the support level in order to get to 1,000. So going to be a lot of clawing our way back to 500. And then if we can materially get past 500 to the point where 500 becomes support, then we can even consider the next leg up. So don't know if we're going to get that in the spring or the fall, before the year end. But nothing has really changed about my session has ended. You suck. You guys can look at Reese Witherspoon while I sign in. All right, what the frick? Did I accidentally hit the sign out button? I think I did. I think I got too clicky. Actually, that was the account I was just looking at, right? Yeah. All right, same thing with this one. This is just kind of my allowance account that I plow my discretionary spending into. And so I took all the covered calls off of this one as well. If I can get this leaps just in the money, that would make me feel better about restarting covered calls on this one. In general, as an option seller, I want to have a net delta positive and also a net theta positive account. And so since this was the challenge account, I kind of ignored the Mandel candle prophecy, and I'm just trading this as usual. We did recover, back from whatever it was, below 250 a share to 300. And so I closed some of the leveraged positions and added more share exposure again. And the only thing that I need to deal with is this $300 covered call that I sold last week for $920. And I will be able to capture about 80% of that. Fucking loud. Forget every time. All right, so you can see that that quickly dropped me to a negative net theta because of all of these long calls I've been stacking. And so let's see what it's going to take to sell a covered call against my shares. Yeah, I am not going to be able to come up with enough theta to make this positive, unfortunately. I don't think. All right, so let me go ahead and I'm going to be extremely aggressive with this one. And let's sell that for $1,000. That only cut about a little more than half of the negative theta out. The main drain are these 1080s. Yeah, the two Septembers are not terrible. But 37 July 1080s, theta is really doing a number on this account. I wonder if I went ahead. Generally, I don't get nervous with these until around 90 days to expiration. But if I rolled these out to September, unfortunately, they would not benefit as much to the to a reversal in the price, but I wouldn't be hemorrhaging this much in theta. So let me think about this. Dividing this by 4. Let's see. Each batch of 10 is worth about 70 delta. So if I dropped 10 of these, it's only going to give me about 2 grand. I could buy 3 more of these. So I'd probably have to dump 20 to convert to September's. Interesting. All right. I'll have to think about that one. I don't like that this is supposed to be an option seller's account and I have a negative net theta here. That is not, that is definitely suboptimal. So, if that continues, I will have to do some switcheroo here. I'll just have to suck it up and take the loss on these and roll them out to an expiration that has a smaller theta footprint. But I think I'll stand pat for now. All right, the 5K account, I don't think I have anything expiring today because the Bitcoin miners prices crashed so far. I guess I do have this one call that I rolled them all out to 45 days to expiration. So here's another example of what I was describing earlier. If you have a small account, I'm going to pay $1, not to Robinhood, but just to pay to close this account. So I got paid originally. Yeah, I sold it for $8. And now it's costing me $1, which is like 12.5% of my profits just in this bid-ask spread here. And now I can turn around and sell another one for next week. And so there's definitely a little bit of friction. So if I sell the 8.5 again next week, right? It says I can sell it for 9, but if I want it to fill, I actually have to sell it for 8. And then next Friday, I'm gonna have to buy it back for $1, which drops my profits down to 7. So you can see that these bid-ask spreads, and that's why trading a stock that's not very liquid is very difficult to do and make money, because imagine if I was only making $10 and the bid-ask spread was so bad that I had to go down to 5 for us for the to get a fill. That's 50% of the profits. So it's critical that you have a tight bid-ask spread with these options. Okay, that's the only thing that I have to do today. The CLSK $10 call, that's been open for about a month. There's not much left in it. So I think the price has recovered enough that I'm just going to roll this to next week and go back to selling weeklies. See if I can get a fill at the mid price. Kind of doubt it. Yeah, they're going to make me go down to 8. There we go. That's a fill. All right, I doubt I can do the same thing with Wolf, because Wolf is just so bad right now. The price is $3 a share. There's no way in hell I'll be able to squeeze any premium out of this thing. And that's another warning for a small account. You know, like I started trading Wolf when it was probably up to like between $5 and $7, $8 a share. I had pumped up, but now that it's crashed back down to 3, there's just no premium here to speak of. This is very difficult. If it's just under $10, $7, $8, it's not that hard to get some premium out of these, but trying to squeeze premium out of something this cheap is pretty brutal. So at best, I'm probably could roll this to 45 days again. Let's go to 42. Yeah, my $6 call is worth nothing. The bid-ask spread on that is probably atrocious as well. So, yeah, this isn't horrible. But at some point, like if the price on Wolf pumps again to $5 or $6, I will probably just close both of them. Yeah, just make sure that you're not getting sucked into something that's super cheap like this, thinking, "Oh, it's so affordable." It's the bid-ask spread and the liquidity makes it extremely difficult sometimes to squeeze premium out of these things. So $10 a share in the miners, plus or minus, 20% is kind of okay. But you're gonna want $7 or $8 a share to be the bottom. Wolf kind of pumping to an acceptable level and getting fooled by this was probably a mistake on my part, because we're right back down to pre-pump levels. All right, cool. Let's check the chats and then we will call it a day. Kevin, thoughts on selling covered calls on Tesla in this environment? I think it's pretty decent. Now, I think you have to be careful with Tesla because I think they're coming up on earnings again. And a lot of times, traditional companies, you know, implied vol will spike approaching earnings and then crash after. So implied vol is going to be big on Tesla right now, period, because of how far their prices crashed. And I think that for the next, I don't know, 20 years, every dip on Tesla is probably a buying opportunity. So let's just check and see. I don't think it's quite as good a strategy right now, but it's pretty good. But just keep in mind that those premiums could collapse after earnings. So yeah, this is like 3.5% return on capital at the money. It's pretty legit. And yeah, if the market gods, if I had cash to spend, I'd probably be loading up on Tesla. But I'm just kind of like waiting for that next move on strategy before I take some profits and start building up a Tesla position. But I am real anxious at this point to start stocking up on my Tesla position again. I got rid of all my Tesla in 2024 to put it all into strategy, which wasn't necessarily very smart. Putting all my eggs in one basket, but I was pretty confident that as bullish as I was on Tesla, that strategy would outperform them. And so that actually worked out pretty well. But yeah, I love Tesla at any price over the next couple of decades. And the premiums are pretty legit right now. Kobe, I love these live spaces that you host. In November, I worried that once the hype busted that these things would fizzle out. I hope you and the team keep the sustained content up. Back in 2022, it felt like we lost a lot of content creators. Yeah, so Matthew Cratter from Bitcoin University had some pretty good advice, and I guess I followed it. I think what did I call the show when I first started? The red pill for the orange pill investor or something. I made it matrixy or whatever, and then just shortened it to the orange pill investor. But what Matthew Cratter said was, look, Bitcoin is going to be the future. And if you can hitch your wagons to it as a content creator, what is it? The rising tide lifts all boats, whatever. I might be butchering that quote, but just attaching yourself to an asset that is taking over the world, Bitcoin's number go up, kind of makes sense that anyone producing content would benefit from that. But you're absolutely right. There are going to be people who just get disillusioned or it's just not fun. Right? Investing in strategy has not been fun for 3 months straight. It sucked. Unless you were Josh Mandel and you were fucking smart enough to short it. But this has been brutal. Maybe a little bit more than 3 months. Is it 4 months now? Yeah. So this felt like we were going to $1,000 a share, right? There's just no stopping this train or whatever. But the train it might not stop forever, but it does stop every so often to let people off and on the fucking train. Um, so a bunch of people got off the train right here, and you could say that they paper hands it or whatever, but they were actually right. Um, I'm not even really opposed to trading in and out of Bitcoin. A lot of people smarter than me seem to think that it's impossible to time the market, but it really doesn't seem that difficult if you just have two assets and you rebalance them occasionally. I'm not saying I'm rebalancing between Bitcoin and cash. I think that would be kind of ridiculous. But um, that's always how the 60/40 portfolio was worked, right? If your 60% stocks went up 10x, now your bond portfolio went down from 40% to 10%, and then you rebalance it. And then the stock market crashes and the bonds go up, and then you rebalance it again. So I don't even blame Bitcoiners for trading in and out of it necessarily. I don't think that's completely unreasonable. As long as you're willing to acknowledge that anything that you trade your Bitcoin for is not a bearer asset and is not sovereign money. Be real. Even this strategy that I've hitched my wagon to is, it's not sovereign money. So they could make any kind of laws or any kind of weird crap could happen that could sabotage the value of the company that would not affect Bitcoin in the slightest. So Bitcoin is the base, and then everything else is speculation, really, I guess. Um, but yeah, I basically made a decision at the beginning of 2024 that I was going to try to make a video a day. I fell about, I can't remember, 20, 30 videos short of that. I ended up taking a little bit more vacation time in 2024 than I had anticipated. So I didn't give myself enough time off, or I didn't project that I would need that much time off. So fell short of the goal, but I still ended up with over 300 videos, I think, in a year. So whether the market was up or down, I was still producing content, and I don't think that's going to change. If we do get another 4-year cycle and we get a bear market from 2026 through 2027, God, what am I going to be talking about? I'll probably be talking to nobody because um, there are going to be some people that will continue to consume that content, but just like the content creators don't want to make content when the price is going down, a lot of people don't want to freaking watch it either. Just a reminder that your bags are being unpacked. So anyway, I appreciate you continuing to watch, man. Tommy D, who gets back to all-time highs first, strategy or Bitcoin? Well, if one gets back to all-time highs before the other, what is it going to be, like a matter of days or weeks? Like the prices are tied to each other. So yeah, she's not hard to look at. What's up, Anthem? Trump will want more. It's the nature of his negotiation style. Look at the Japanese investor who offered 200 billion, and Trump was like, "Oh, he's going to invest 500." Yeah, even with the Ukraine thing, he's definitely 100% wheeler and dealer, because I would be like, like when a guy finally gets to where he just can't take it anymore and is happy to exit a relationship with literally the clothes on his back. And he's like, fuck it. You can have the house. You can have it all. My freedom is reward enough. That's kind of how I feel about Ukraine. I'd just be like, look, we out. We're done. And he's like No, I want minerals. Like, no, just leave. Oh God. Yeah, he always wants to skimp a little off the top, even though that's just an entanglement, and now we're still stuck affiliated with fucking Ukraine. So I hope that was posturing and that amounts to nothing, and that we just cut all the freaking strings. A snowy negative net theta for the win. More July 1080s. You were not bullish enough. I clearly am not bullish enough, and I should be ashamed of myself. What's up, Thomas? Holding strategy for 5 years and adding to the position. As you and Mendel say, it's time to collect rent. Started buying MSTY, but would like to sell out of the money covered calls. You started buying MSTY? Yeah, they'll do well. I think everybody's looking for the optimal strategy, and I have no idea, right? So just holding, if you just held spot strategy for 5 years, you'd be up 2,779%. Like, you don't need covered calls if you can make that happen. However, the average investor is not going to be that lucky. The average investor is going to be oh, they went out of fucking business. Anyway, I can't even find Nikola anymore. I guess maybe they are not even listed. But the founder was found guilty of fraud. And if you think you found the next best thing, you probably haven't. And so if MSTY existed 5 years ago, would they have outperformed 2,780% returns? I don't know, maybe. They would have been printing money from January 2022 all the way through 2024, and then they would have missed all of this. Just like MSTY missed all of this, but then implied vol was so high here, now everything that they've been selling since November has been printing. So does it all cancel out? Like, I don't know if spot, MSTY, my covered call strategy, or being smart enough to stack long calls, because punter Jeff and Radu, they've been kind enough to share some of their long calls that printed, but they were buying these long calls that expired 2 months ago. They were buying them here. They were buying them 2 years in advance, a year and a half in advance. And so if you buy, if you get lucky enough to buy a long call deep out of the money before that price goes up 10x, great. But, they were buying these in the middle of the bear market. And so to think that you can buy the 1080s at any point in 2025 and expect them to go in the money, I think is learning the wrong lesson, right? So if you look at what they did and you think, oh, well, they bought the deepest out of the money ones and all they did was just wait a year and a half. Well, if if you buy 1080s today and you go out a year and a half, now you're at August 2026. If August 2026 is square in the middle of the bear market because the 4-year cycle continues, then all of the calls that all the 1080s that you buy today will be completely worthless if you hold them that long. Now, if you buy 1080s today, even for August of 2026, and the price goes to 850 next month, or even by September, October, or whatever, the price 4x's from here and goes to 1,000 a share. They're not in the money, but they will be extremely profitable. Do I have the 1080s loaded here? No. So when you buy a strike, the price doesn't necessarily have to go in the money to be able to sell that one as a profit or for profit. And so all of the 1080s that I have now, I'm just hoping that they become profitable. I'm not really counting on them going in the money necessarily. I'd be happy if they did, but by the time any of my 1080s actually went in the money, I would have sold like 90% of them off anyway. So, um, yeah, that's kind of how I feel about that. Let me just see. I don't even know if I answered your question. Would like to sell, started buying MSTY, but would like to sell out of the money covered calls. Yeah, I'm basically just waiting for us to pump, right? The next time we get a 4x move like this, I want to have captured at least like half of it before I start selling covered calls heavily. And I'm waiting for, oh God. And I'm waiting for the implied vol chart to look something like this again. I want to see a nice big implied vol spike before I really start hammering covered calls, which will also be my signal to start closing a bunch of my long call positions, these guys. So by mid-April, I will at least roll these Julys out. I'd be happy to just break even on these at this point. But yeah, the signal for me to start selling covered calls is the same signal to start closing my long calls out. You know, it doesn't have to be this big of a spike, but something. I need some kind of spike here. This guy was just a little tease. This one that we had a couple weeks ago. James says, I will be with you in the bear. All right, looking forward to it. Cocky, hi Nithu. I follow what you are saying. Are you just vibe selling those 1080s on a profit, or is there some kind of strategy behind it? Mostly this chart here. This is Market Chameleon. You can make a free account. Go down to the volatility section, implied vol. So when implied vol is pumped like this, that is a reflection of high options prices. And options are no different than anything else. If you're buying them, that is, you're going to buy low, sell high. And so if you see a spike like this, that means that options prices are high. It doesn't necessarily matter whether the strategy price is, you know, 450 a share, 750 a share, 1050 a share. The options prices are going to be inordinarily high for whatever price we're talking about. So if I can get some profits here, I will be taking them. Doesn't necessarily mean I'm taking off every position, but let's just say I have 10 long calls. If I can double my money and close half of them, now I've made sure that I can't lose money. And now I've got 5 calls that I can just, you know, if they go up to 3x, 4x, 5x, maybe I close another 1 or 2. And then at some point, you know, maybe you have one of those 10 calls left. You've already locked in profits and you can just let that last one just ride or die. It, you know, it either gets to 1080 and goes in the money or it doesn't and it expires worthless, but you kind of don't care because you've already booked profits on 8 or 9 of the original 10 calls. You know, if you can only afford to buy one call, then you can't do that. But, you know, in the event that you do have multiples, that's kind of one thing that I like to do is just unload half of them at a 2 to 3x profit just to make sure that it's impossible to lose money at that point. So not really a vibe. High options prices will be reflected in some kind of implied vol spike like this. Doesn't have to be this extreme. Maybe it only goes to like 150. The 30-day implied vol only goes to like 150 or something. What was it in November? 226. So this most recent little spike only went to like 100, right? Yeah, 115. So I'm thinking implied vol spikes to 150 plus again. That's kind of a sell signal for me. And of course, strategy's price will be higher. I don't know if we'll clear 500 again before we get another correction. But that's what I'll be looking for. Tasty Trade also has a nice indicator. It's this one, IV rank. So with a 27.9, that means over the last 365 days, on a scale from 0 to 100, this is like the 28th, not percentile really. IV rank is a little different than IV percentile, but if you arranged all of the IVs over the last year and then ranked them from 0 to 100, 0 being the lowest IV rank of the last 365 days and 100 being the highest IV rank of the last 365 days, we're at a 27.9. So anything over 50 is going to be like higher than normal. It's going to be closer to 100 than 0. So once this goes over 50, that can be kind of like a little bit of a incentive to sell covered calls or maybe close some long calls if you can for a profit. So between that chart and IV rank, those are the two metrics that I personally trust. Not financial advice, but they seem fairly reliable. I'm in the July 800s, and I think I will be just offloading them one by one on a move up. Yeah, I think that makes sense. So Max, well, you can't time the markets, as they say, but in 2024, out of the money April calls bought in February did well. Yeah, they damn sure did. What's up, Snow? Nothing stops this train. Love you back. And you're very welcome. All right, looks like we're all caught up on the chats. So let's call it a day and be good, y'all.